Welcome to the Creative REI podcast, your go-to hub for all things real estate, business, life, travel, etc. I'm your host, Dante, joined by my co-host, Ed, both real estate professionals on a mission to connect and educate. This podcast is sponsored by PropStream, the most trusted provider of comprehensive real estate data nationwide. What's poppin', everybody? It's your boy Dante with the Creative REI, where our two goals in this brand, what do we call this? Episode brand? No, the goal of the brand is to educate and connect.
There you go.
Edit that out, Mike.
Keep it in, Mike.
Guys, today's guest to you will have you thinking about, have you ever sold a property and had a huge tax bill from capital gains tax and wish you could have kept that money towards another property? He's going to show you how to keep that money today.
That's right.
My guy with 1031 Exchange, Brandon Burns. Brandon, thank you for coming, bro.
Yeah, man, I appreciate being here. I think what you guys are doing are great. I think one of the most important things you can do is educate, right? Because with good data, people can make good decisions.
Yep.
And with a lack of data, the decisions are going to be random. So you guys are out here empowering, making sure people can make the best decisions for their situation. I love it.
Yeah. Well, so aside of 1031, fun fact, your attorney owns this building. Is that true?
They do, yeah.
Ed's going to get on PropStream, and we're going to end up. Shout out to PropStream, by the way. We're going to get on PropStream, figure out everything about them, how much they bought it for, and the debt servicing. Guys, if you got any 1031 exchange questions in the live, feel free to drop them. Brandon, number one, who's Brandon Burns? Let's talk about that.
Well, as the vice president of the U.S. said, I'm sitting here in a blue suit. So my background's always been on the financial side of real estate. And about 5 years ago, I was lucky enough to stumble into this really interesting niche part of real estate, right? So a lot of times people ask me what I do. On dates, it's actually really difficult to answer. If I'm with real estate people, it's easy to explain. They know, hey, I don't pay taxes, right? There's a lot of benefits that are available to people that own real estate, really because the rich and powerful out there, they write the rules, they write it for themselves, but it applies to all of us, right?
Yeah, if you know the rules.
If you know the rules. So, but it's tougher to explain on a date. Say, hey, what do you do? Well, it's kind of taxes, but it's kind of real estate, but it's kind of hard to explain. But really at the end of the day, death and taxes are things that we can't avoid.
They're
right?
inevitable.
They're inevitable.
Facts.
And there's different types of taxes you're going to pay, right? You're going to pay income taxes. If you get money, I've got these memes that I think are really interesting. It's a classical looking guy, and I'll send them to you. It's a classical looking guy, like a painting, like a Da Vinci type painting, with his hand out and his finger in his palm. And if you get money, the government gets money. If you buy something, the government gets money, right? The government gets money really at every point along the way.
Right.
However, in section 1031 of the tax code, if you sell an investment piece of real estate and you buy an investment piece of real estate, you jump through some hoops and you have a babysitter, which the tax code calls a qualified intermediary, then you can fully avoid and defer that taxable event. So that's what I do all day long, is help people avoid and defer a taxable event.
Hence the name 1031 Exchange.
Yeah.
So section 10, I didn't know it was a section code.
Yeah.
That's dope.
You can literally look it up. It's really boring. It's good for like a Friday night when you want to fall asleep. I recommend it for that.
Okay, so let me ask you this. How does somebody take a property that they have now, let's just say under the regular name, and throw it into a 1031? Is that possible?
Yeah, for sure. So remember, or maybe one thing I like to think about, right, when we think about these kind of questions, is the IRS is some person sitting in a dark room with no windows, and that person is looking through, tracking money. So all a 1031 does is keep a taxable event from happening while you swap out properties, right? So if you were the best investor in the world and you put $100,000 into Apple the day it IPO'd, and today it's worth $100 million, you haven't had to pay taxes on it along the way, right?
Right.
So it's the same kind of thing. A 1031 exchange allows you to move in and out of different properties, allows you to diversify, increase your cash flow, do a lot of really cool things, but not have to pay taxes along the way. I had this little old lady, and we were doing a 1031 exchange into a $12 million multifamily in Mission Hills.
Mission Hills. Oh, wow. How many units?
It's 18 or 20.
18 units for 12 million?
Yeah, I think it was about 800 grand a unit or so.
They could have put their money into so many more units, like out of
So many
state.
more. But she told me, she said, Brandon, 1031 is the best thing that ever happened to me. And that lit me up, right? I've got a 1031 pen. I live and breathe 1031 exchanges. I said, how come? Can you tell me why, as a 70-year-old woman, 1031 exchange has been the best thing for you? She said, well, I was a teacher. And she said, when I was 28 years old, somebody told me, listen, you need to buy real estate. And so instead of just getting drunk in PB all summer with her friends, she got a job, I think as a cashier or checker at the time, saved enough money to buy a duplex. And every 5 to 10 years, she 1031 exchanged until today. She's got 12 units paid off, or $12 million worth of real estate paid off. And she's like, Brandon, I can give my grandkids gifts that I never could give them otherwise on a teacher salary. I can have a great style of living here in Southern California and San Diego that I couldn't have done otherwise. And that's really the power of a 1031 exchange. You can just grow that wealth.
So the tax deferment, do they still got to pay capital gains at the very end, or do at some point maybe they take out some of those funds and like actually use it like what you just said right now most of the time? Or is it like mainly they wait till the very end when it's like retirement's here, don't care about the taxes, I got more than enough money to just do whatever I want?
You could definitely do that. Most people, what they'll do is they'll just try to grow that nest egg and then cash flow it, right? So in California specifically, you got this great appreciation, but it's a lot harder to have cash flow. So, if you can create 10, 15, $20 million worth of wealth over a couple decades and then roll it out and invest it in somewhere where there's better cash flow, then you can have this residual income coming in while you don't touch your nest egg.
Yeah.
And then once you pass away and that gets transferred to your heirs, they get what's called a step up in basis. So whatever the value is at the time they receive it, that's their tax floor. So they get to avoid all those taxes that were created during your life.
Wow.
Yeah.
So it can be passed on. How many times? Is there just once? Infinite?
Infinite.
So if I don't sell these properties, they keep cash flowing, I keep rolling them into 1031.
Yeah.
That ceiling keeps dropping. Taxes never get paid.
Taxes never get paid. Yeah, you give it to your kids when you pass, and let's say it's worth $20 million when you pass away. Your kids get it. Anything from 20 million is the floor, the basis. So if they sell it for 20 million, no taxes. If they wait 5 years and sell it for 23 million, they're only paying taxes on that. Yeah, the growth. Exactly.
So I'm sure there's a lot of families out there that just would pretty much, we want to sell all of it, and they don't have to worry about any capital gains tax. Yeah. Dang. Yeah. Okay. I totally thought this was deferred. You're just delaying the inevitable. But in this case, like this is the loophole, the
generational wealth. People talk about generational wealth. This is actually
the real stuff.
Passing your wealth generationally. Yeah.
Interesting. Man. So the lady in Mission Hills, is this ugly side is what are some cons of this? Give me those. I feel like there's just everything's good about this.
So yeah, nothing's perfect, right? I had a situation here recently where there was a gentleman that was doing a 1031 exchange, and he wanted to take some money out, and he didn't tell us. So when we got the estimated closing statement, we noticed that he was getting a little over $150,000 back. And so I called him, let him know, hey, listen, Mr. Exchanger, if you get this money, you're going to be taxed on it. He was not happy about it, right? So we're here. What my goal is and my firm's goal is to make sure that people know what their actions are going to do for them.
Right.
And they need to know if they do A, then Y happens, right? Or if they do B, then Z happens. So I said, hey, looks like you're taking some money out. He said, yeah. So if you do that, it's going to be classified as profits. You're going to get taxed. He was very unhappy about that.
Now, in a typical let's say Burr strategy,
Yeah.
right? I buy a house, I renovate it, I put a renter in, I refinance the money. If I'm not mistaken, check with your CPA, but money that's lent to you cannot be taxed.
That's absolutely correct.
So if this guy, let's say, bought a property, did a maybe cash to credit, but was financing that cash, not coming out of his actual funds, is that still taxable?
No, so loans aren't taxable.
Okay,
so
cool.
what I told him to do in this situation
This is based off the money he got from the last one. He thought
Right.
he was slick.
He thought he was trying to be slick. And I told him, hey, you can still be slick if your lender will cooperate. What you need to do is you need to hold back that 150 grand, have your lender hold it back and give it to you one day, 1 week, 1 month later, then you're okay. But if he gets that at closing, any money that comes out at closing, the government's going to say, all right, hey, that's equity. You're taxed on that. So, you know, hopefully he was able to get his lender to hold some back and give it to him one day, 1 week later, right?
Like, hey, guys, we're not going to commit fraud. We're going to sell some crack. And that crack is 1031 exchange. This is good stuff, man. I'm learning stuff myself. So, okay, what else?
And there's a time period on 1031, right?
Yeah, so there's a number of hoops that you've got to jump through. One of them is time. It's a great question. So once you sell, whatever date's on that settlement statement, 2 clocks are going to start and run simultaneously. 45 days to come up with a plan, write down a number of properties you may or may not buy, and then 180 days to close on them. And a lot of people know that the time matters, the time's important. What most people don't know is that you have to buy the same amount of value than what you sold. So the government doesn't care what you paid for the property, what your basis is. They don't care what any loans that you have on it. They only look at that top level number. They allow you to deduct the cost of the people that worked on your sale. So that's real estate commissions, title, escrow, 1031, but that's it. So
pause.
Yes.
We wholesale. We are not real estate agents. We do wholesaling, assign contracts. We do novations, sometimes do sub 2. Probably sub 2 is not really
it's harder with 1031
it's
exchanges.
not, yeah, it's not something. Actually, I got a sub 2 question for you, but that's we'll go after that. But so let's say we buy a deal from somebody who's got a 1031, or they want to roll the money into 1031 and
no taxes.
They know we're going to assign the contract. So we have it under contract for, let's say, 375. We find a buyer at 410. They're getting ready to close on this. Is that assignment fee part of the purchase price that they'll have to use?
Yeah.
Wow.
So it's the same thing with credits, right? So what you could potentially do is sell a property, and that same property you could sell for 800,000, but give yourself 390,000 of credits. Now it's 410. It's the same kind of concept, right? Okay. So, you know, they're selling it for 375, you're selling it for 410. That whatever that number is, the IRS is all right. We're not going to let any games happen. I mean, the IRS, they're like the mafia.
They know what they're aggressive. Doing. If it's anybody that's the biggest gang in extorting, it's them.
Absolutely. So you're going to say, okay, 410 is the number we're going to start. Now we can subtract any realtor commissions, title, escrow, 1031. But no, they can't deduct assignment fees. You can't deduct credits. You can't deduct anything else, unfortunately.
So we had a deal like that, but we did an novation. Okay. And I think we had to do repairs on it or something. So they were allowed to write it off as an invoice for a rehab. Does that count, or are they still going to count that extra number?
So that's increasing the basis, and that matters and that counts if you're going to pay taxes. So let's say that you bought a property for 400, you're selling it for 800. Just use round numbers. You're going to be taxed essentially on the gain on that 400,000. However, if you go and you do a lot of repairs, you document those repairs. And
let's say we had a whole
100 grand
invoice.
100 grand
invoice for repairs, and obviously the repairs are line items.
Yep.
Okay.
So
flooring, paint.
That increases the basis from 400 to 500. So now you're only taxed on the 300 gain instead of a 400 gain, which really matters. But in a 1031 exchange where you're rolling it, because you're not paying any taxes, whatever your basis is just doesn't apply to that situation.
You guys hear that? Do what you want with this information. Anyways,
that's
back
a very
to the
pregnant
show.
Pause. That's a very pregnant pause.
Hey, so we're known to that. So I do these. People like listening to me on the phone. It's called Dials with Dante.
Yeah.
and I like to do the most uncomfortable pauses. It's, hey, Brendan, it's Dante.
Hi, Dante.
What's going on, man? What'd I catch you doing?
I'm on a podcast, actually.
Well, you want me to call you back? Sounds like you're in the middle of something.
I am in the middle of something.
All right, I'll call you back. But the long pause, right? That long pause. People love that. It's like so uncomfortable. And it's one of those things where I think I've stood paused for like a good minute.
I mean,
like a good
I've seen
minute.
really powerful people in the world either do that or do whispers. It goes to the economy. So, I think changing your tone, changing your speed, that's solid, man. That makes people pay attention. I like that.
For sure.
Yeah.
Okay, so recap. If you're going to wholesale a 1031 deal, know that your assignment's going to be included. There may be certain things that you could put on line items that might help that. Rewind and watch this again. Well, you don't have to pay these taxes if you pass it on to your kids at all. There becomes a ceiling. That is awesome. Dope. So if I like leave it with my girls, they don't have no taxes. I love that. That's amazing.
Yeah.
Have you ever done deals with wholesalers or investors that buy, or are these how you don't
100%.
Okay.
So at this point, I've been a part of about 4,000 1031 exchanges.
Mm-hmm.
So as farmers, I don't know if you've ever seen a farmer's commercial. It says
farmers insurance.
We know a thing or two because we've seen a thing or two.
Right.
Yeah. So I've worked with a lot of wholesalers over time. I bought properties from wholesalers, been a part of a lot of 1031 exchanges from wholesalers. I think wholesalers actually do a really good service where they one of the things that is true about real estate is very inefficient in the short term and very efficient in the long term. Mm. And wholesalers bridge that gap at some level, in my opinion, or most of the time they do.
Right.
There's some wholesalers that aren't great, but
okay, so I like that you say that because we talk about recently, the recent discussions that we've been having is the ethics in wholesaling in general and how there's regulation coming out that's going to start, happening soon. People are going to have to be licensed, so you'll have to work with a licensed realtor to be able to even wholesale now at that point. But I think the ethics behind wholesaling gives it a negative perspective versus what wholesaling really is there's those people, they don't want to have somebody come into their house and furnish their property and have a bunch of strangers walking in. They just want quick and easy.
Right.
And that's what you said, like wholesalers bridge that gap. So
they really do. And I don't think there's a problem with wholesaling at all.
Mm-hmm.
What probably makes sense at some level is having some kind of minimum standard, right? Because no matter what industry you're in, it doesn't matter if you're a barber, doesn't. If you sell cars, sell houses, sell stocks, right? If somebody comes in and they don't know what they're doing in a really large financial transaction, they haven't paid attention, they don't have a good mentor, then they can mess things up. But that doesn't mean that somebody who sells stocks, somebody who sells, is wholesaling on for real estate or anyone else that's doing large transactions, that's a negative thing. There's so many times, and here's actually a good example. I had a friend, and they lived in their family home in East County for 3 generations. And over 3 generations, there were things that needed to be repaired.
Of course, normal wear and tear.
I mean, when I move, it's a pain in the behind, and I might have only lived there 3 years. Right?
Yeah.
Let's talk about 3 generations. And so the house needed to be sold in an as-is condition. The 3rd generation person who owned the house,
they don't have money to fix it.
They don't have money to fix it. They didn't have time to fix it. They didn't have knowledge to fix it. They were like, hey, listen, I'm leaving San Diego. There's other things I need to do, kind of the next phase of my life, and I need help here. And
we call those unicorn sellers. I say unicorn because even people that are in those predicaments, for some reason, think their house is worth market value, regardless of how much work it needs or all the hoarding shit they have in there. Wholesaling, I hate it. I'm not even gonna lie. I'm not a big fan of it. I appreciate wholesaling because it got me my foot in the door in real estate, but just all the shenanigans involved with it. I'm really good with just acquiring the properties and then figuring out what to do with it. But it does come in handy whenever
it provides a service.
Yeah.
I've personally bought a couple properties from wholesalers, and I'm
You're
so
from
glad they
Dallas,
did.
aren't you?
Yeah, originally, yeah.
Yeah. So I started wholesaling in Dallas. That's where I did my first deal.
That's cool.
Yeah. And then you moved here to San Diego, but you do 1031 in both places?
Yeah, so I do 1031 exchanges nationally. The only place I haven't done a 1031 exchange is in Maine. So if you know anyone that's selling in Maine, I would really like
So you can
to check
cover
that
all
box
50 states?
and be like, hey, I've done an exchange in all 50 states.
All right, so check this out. My boy Encore.
Shout out Encore.
Good name.
Yeah, Encore owns a multifamily syndication. He was on the show previously. He wants to know, do you have many 1031 investors who swap into TCs or DSTs for more of a passive investment?
Let me explain that. So when you buy property, when you do a 1031 exchange, the IRS says, hey, there's some rules. They don't want you taking the money out of real estate, buying a plane, buying a car, whatever it may be.
That sucks.
They
No
want-
Rolls Royce, no private jet.
Trump actually changed that. It used to be you could do private jets. You'd think he would be the guy that would be like, hey, private jets are still cool. Nope. He changed it. It's only real as of January 1st, 2018, only real estate.
The irony.
The irony. So
Okay.
So let's say somebody's selling a property. Let's say that I'm 75 years old and I bought a property and I paid it off.
Mhm.
But maybe that property is in Ramona. This is actually a real example.
Mhm.
Maybe that property is in Ramona and I haven't really raised rents in a long time. I like my tenants. I don't really know that I could raise rents because I'm an older person. And so I don't have enough money to hire a property management company.
Mhm.
So maybe I'm driving to Ramona once a week to fix a microwave.
Right.
So I'm like, hey, listen, I like owning real estate. It's been great for me. I don't know that I love driving an hour and a half to Ramona once a week
Mhm.
to fix a microwave,
Right.
right? So at that point, that person might say, okay, I want to sell. I'd really like to not pay taxes, but I also don't want to have to go qualify for a loan, go in a bidding war for another property.
I don't like bidding wars
I'm
either.
just too old. Dude, I'm 40 and I'm too old for that.
Yeah.
Right. So there's two different scenarios where somebody could take that money tax free and still have it in real estate that produces income.
Mm-hmm.
The first one is called tenants in common. That's a joint venture where both parties go on title.
Mm-hmm.
So when you sell real estate, you have to buy
Non-married
real estate.
couple.
Non-married
Might
couple.
we add?
That
I learned that in real estate school.
that's a great point. Good catch.
I'm a dropout, but
Dude, you caught it.
I did. I learned something. Shout out Steve Jobs.
So people can go on title next to each other. So if I sold the property for $1 million, you and I won a JV, I just have to go on title for another $1 million worth in order to satisfy the exchange requirements. But
Okay.
so let's say we bought a $2 million property. I'll put in the money, you put in the work, I'll go on title for half, and you go on title for half. Now we're partners. So that's a TIC or tenant in common.
We buy properties where we raise capital.
Mm-hmm.
They put up the money.
Yep.
We do all the work.
Yep.
They both take title, tenancies in common, which is us. But you're telling me there's a way to do that with 1031.
Absolutely.
And the rules still apply to both tenants in common.
So the rules just apply to the exchanger.
Okay.
So exchanger sells a property. They've got to buy under the same social or EIN number, under the same taxpayer ID, and they have to buy the same amount of real estate that they sold. They have to go on title for that amount.
What about the other person that's the partner that's not the exchanger? How does that work?
IRS doesn't care. They don't care about you.
Really?
Yeah.
But if you were to sell, don't they split?
So, okay, so if you're going to sell, and this is another interesting issue. So this happened a lot down by San Diego State. 10 years ago, a lot of people, younger guys like us, were like, hey, I see an opportunity here, but maybe I don't have $5 or $10 million to go buy and create these mini dorms around San Diego State.
Mini dorms.
It was a big thing about 10 years ago.
We have
I
a
don't know
deal.
about
We have
that.
a deal. We have a deal near San Diego State right now.
Nice. You should make it mini dorms.
It's worth $1 million. We have it for like way less.
That's great.
Y'all thought we were gonna tell you.
you
huh?
always
Wait
wanna
till we
have it for
sell.
way less.
Or-
Yeah, they're all. You can see like the viewers' ears are like, Yeah. Yeah. Great location. Very great location.
So let's say that you and I bought it together. You did all the work. I put up all the money, and we went in as an LLC, and we went on title. So we created Mini Dorms LLC.
Okay.
And I'm a 50% partner. You're a 50% partner.
Right.
Well, now fast forward to 8 years. Let's say it was 8 years ago.
We sell.
And you're going to sell, and you're like, I flipping hate Brandon's guts. Screw this guy.
Yeah,
He's
I
the
want
worst.
out of the business, and I want half my money.
I want my money. I'm going to go buy something else. I've created some wealth, and I want to go do a deal on my own.
Okay.
Brandon's a pain in my ass.
Mm-hmm.
So what we would have to do if we sold under the LLC, if money went to you or went to me, the LLC would have to pay taxes on it. We can't separate and do it tax-free. Right. So what has to be done before a close is called a drop and swap. So either you or I would drop out of the LLC and go on title next to the LLC for that percentage, let's say 50%. Now that we're tenants in common, we can move independently of each other.
So then there's no tax money on any money that I get from wanting to leave Brandon Burns.
Right.
Ooh, are you catching on to this?
Yeah.
So that's powerful. Now, there's only one important thing to know. The IRS has no problem with it. State taxing authorities have no problem with it. But the Franchise Tax Board, like 4 or 5 times, have challenged drop and swaps where you change title and drop out the same day as closing. So if you're going to do that, in order to
delay your closing,
just do it earlier in the process, before or soon after entering escrow. Then the Franchise Tax Board won't come screw with you. But it's important to know that, right? I think 4 or 5 times they've challenged it, and they haven't won every challenge. But still, you don't want to be challenged by a government entity.
It's just it's like I know I'm going to get away with this crime, not get away with this crime, but I know I'm going to win this case against this crime I have. But it's the process going through, the whole process, which is stressful.
Yeah. And government entities are the last people that you want to go to court against because they don't have any costs, right? So if you can avoid that, which you can do by just doing it a little bit earlier, then you're fine.
Let me ask you this: I have a property right now, currently under a trust.
Cool.
With partners.
Okay.
There's a trustee and all that. What if we were to roll that into 1031, but we don't want to sell it right now? We want to roll it in. Is that possible or?
100%. That trust just has to do it. What kind of trust is it? Do you know?
From what I was told, we can't do land trust in California? Question mark.
So this is one of the cool things about real estate is you learn something new every day.
I love that. That's for me. It's how we got to where we are.
So people talk about land trusts all the time.
They're big in Texas. That's why.
I've asked 5 or 6 attorneys, what the heck is a land trust? I have seen 4,000 closings, and on title, I've never seen anything called a land trust.
It's like, I don't know, it's the address trust,
I've seen revocable trusts. I've seen irrevocable trusts.
I have no idea.
See,
I don't know what type of trust it is. I just know that it's the address trust.
So
123 Main Street Trust.
I've been trying to figure out what kind of legal entity, and if any of the viewers know this, I genuinely have been trying to figure this out for about 3 months. What's the difference between a land trust and a revocable or irrevocable or any other type of trust? I don't know the answer. But I do know that if you have a trust,
we need to bring an attorney on here.
That'd be good.
That'd be cool.
That would answer the question.
Like a mediator.
Hopefully, well, make sure they know, because I've asked a couple attorneys and they have not known.
And these are real estate attorneys?
I've asked all kinds of attorneys, so I'm trying to figure it out. Okay. So if there's any attorneys that are listening, please let us know. But the key is any entity, if we have social security numbers, we're entities. Corporations have EINs, they're entities. If a trust has a taxpayer ID number, most of the time they're an entity. There's some exceptions. A revocable trust, it's just a disregarded entity. Everything passes through. So it really depends on what kind of trust it is. And also, I want to figure out what a land trust is and what makes it different.
What about if
genuinely?
What about if so we bought a property and we added a unit on there, and that unit costed us $150,000.
Okay.
And no, never mind. I just answered my own question. Essentially, it's based off the selling price, not.
Yeah, exactly.
So if let's say we bought it for let's say we bought it for 900, we
Yep.
put 150K into it, we sold it for 130, right? Is there still a way to do, like, I think you said cost seg or some sort of depreciation off
Yeah.
of that work that we've gotten, or are we got to eat that?
So a lot of times people ask me really detailed questions about transactions like that, right?
Yeah.
I can answer that very specifically if this is the only thing happening in your financial life.
Mhm.
We can have a really clear answer. But if anything else is happening in your financial life, it can affect it. So
Mhm.
this is where it's good to talk to a CPA and
Mm.
say, so I had somebody and they had a $200,000 gain and they were trying to figure out, do I do a 1031 exchange or do I not?
Mhm.
And after talking to their CPA, they were able to do, on some other properties they own, they were able to do some advanced depreciation strategies like a cost seg, and they were able to eliminate all of those taxes and put all that money in their pocket.
Right.
So no reason to do a 1031 exchange if you can just take that money and not pay taxes on it, right?
Right. What if we had somebody who did a 1031 and they were wanting us to find them a house, and we kept bringing them a bunch of sub 2 deals, but I guess their guy wasn't even answering them for whatever reason.
Rude.
Is there right? So missed out on a bunch of good deals, asshole.
Yeah.
So if I wanted, let's say, I don't know, we sold a house for what, 350, right? 350 has to be the purchase price. But what if we got, within 180 days, 10 subject to properties with 25K each? Is that equal that amount? That's more there, right?
10 properties
Times
for
25
each.
each. Yeah.
Around there, yeah.
Is the math mathin'? The math is mathin'. Is that possible? Could we do it that way? Or does it have to be a complex? It's got to be one unit with multiple doors. Like, we're trying to figure this part out
Great
because
question.
we had a situation where somebody had 1031. We had a ton of subject to deals. These houses have little to no equity, but they have 3 to 4% interest rates. And where are you finding
Awesome.
interest rates at 3 or 4% right now?
Nowhere.
Exactly.
Yeah.
So why not park your money in some of these, let them cash flow, and
Totally.
then wait for the appreciation to go up over time, since these are long-term plays anyways.
I love it. So here's the way to look at it to make sure we're looking at it right.
Mm-hmm.
So a sub 2 simply means that you're taking it subject to the existing debt.
Correct.
So it's very similar to going and getting new debt,
Right.
except it's cheaper, right?
Mm-hmm.
So the IRS doesn't care where your money comes from. They don't care if to replace the debt on what you sold, right? So let's say in that situation, somebody sold for $300,000, but they owed $100,000, so they had $200,000 in cash.
Say we have one for 335,000. We bought it for 350 because that money went towards closing cost, catching up the arrears, and now we have this debt for 335.
Cool.
Entry fee was 40 grand.
I want to make sure we don't get confused, so hold on, let me take a quick step back.
Okay.
So somebody sells a property, they've got $200,000 in equity, and they've got $100,000 of debt they need to replace because they sold for $300,000. Right?
Okay, got it.
So now they've got $200,000, and they can go buy an unlimited amount of properties potentially, and the IRS is going to look at two things. One, did you buy at least $300,000 worth of real estate?
Right.
Two, did you roll all $200,000 into the next deals? So it doesn't matter if it's subject to. It doesn't matter if you get a 10% loan, a 2% loan, a free loan. It doesn't matter if you write the equity out of your pocket to replace the debt on what you sold. So sub 2 absolutely works. In that situation, they could buy 10 properties, maybe a $20,000 entry fee, and it's likely that those 10 properties are going to be worth more than the $300,000 property they sold. So now they've taken one asset that maybe was falling down, maybe had some problems. They've turned it into 10 sub 2 deals with very low interest rates. So they can cash flow probably a lot better.
Right.
And you're in 10 different assets. So if the market goes up slightly, you've got 10 different pieces that all go up.
Long story short, it's possible.
Yes.
You just got to find the deals and make sure it equal to or more of what you sold the house for.
Absolutely. So two things. One, did you roll all the money? Two, was it equal or greater? The total value of what you bought, whether it's one deal or 10 deals, is the cumulative value of what you're buying equal or greater to the value of what you sold.
Damn, this is good stuff.
So that's all that
Does
matters.
it have to be the same asset class, like single family?
Good
or?
question. No, it doesn't. So the IRS
Ed
defines.
hasn't talked the whole show,
just
and he
brainstorming.
comes
This is
out
good.
with like
He's thinking. He's a
He's
thinker. I can
Wow,
tell.
I know. It said Ed
Dude,
just like he's like
He's the
think-
brains. You're the what?
Yeah, I'm the Beast,
I don't
Beauty
know.
and the Beast. Oh no, Batman
No,
and
but-
Robin. No.
But so what is like kind, right? So a 1031 is called a like kind exchange. The IRS defines like kind as real property. So what does that actually
Anything
mean?
that's real property.
Anything that's real
So I
property.
can't do a mobile home.
So the key is, do you pay property taxes? So
Okay.
on mobile homes, great question. Somebody asked me this 3 or 4 years ago. I was like, well, gosh, I don't know. And I went and asked our general counsel, and he said, well, are they paying taxes at the DMV, or are they paying taxes on real estate to the county?
Mm-hmm.
So because mobile home, maybe you own the land underneath you.
Mm-hmm.
Maybe you don't, right? So you just got to check. If you pay property taxes on it, it works for a 1031 exchange.
Right.
So yeah, you can sell single family, buy land, sell land, buy multifamily, sell multifamily, buy a hotel, sell a hotel, buy a strip center, sell a strip center, buy a bunch of single family
It just needs
houses.
to be real property that you pay taxes on.
Absolutely.
Ooh.
The government, they just want their piece. They're like the mafia. They just want their property taxes.
Always.
Yeah.
So, Brandon, where do the people find you if they want to learn more about 1031 exchange? Maybe reach out and have you do their 1031 exchange for them.
So I like to laugh with my friends. And and this is part of how we connected originally.
Yeah.
During 2020, I decided I wanted to laugh with my friends. I was tired of sitting home alone and bored.
Ooh.
So I started posting memes on Instagram.
Mike, load up the meme pages. Tell me, matter of fact, Mike, I want you to do the memes that you think are funny on his page.
If I'd have known you were going to show the memes, I would have put more up there. But there's a
Man,
couple on there.
We're going to let Michael Taylor pick and choose. Shout out Michael Taylor in the back making this happen.
Shout out, Michael.
But Mike, I want you to pick what memes you think are funny from Brandon.
Well, I post some memes in the story, so you got to look. There's like 2 or 3
oh, they
there
are
right
in the
now.
story. Okay, hold on,
Yeah.
wait. Oh man, I wish you had told me that.
Sorry.
Yeah,
Oh,
next
my
time.
bad.
No, that's good. That's good. No, I just know that I would look at the memes and I would be dying, and then it's all referencing to 1031. That's good. Ironically, the Creative REI's entertainment side is inspired by you, sir.
Well,
so whenever
dude,
you see
I'm super honored. That's
any
amazing.
funny memes, yeah, here we go. When Eminem did a diss on Michael Jackson 2005, Michael made no comment. He went and bought Eminem's whole catalog. Damn.
Yeah.
It's actually pretty good.
That's a strong diss, right?
Yeah.
You made a diss. Instead of saying anything, you just went and bought it. So every
There
time
you
Eminem,
I was telling you, 1031, you guys want to just laugh at some memes because you ain't got no property yet? Get your bread up and then come over here and talk to this guy about not paying taxes so you can pass it to your kids.
and then you can roll into sub 2 deals that you guys find, which I
love
think is
that.
fantastic.
We had literally a conversation with the guy. He's like, I don't know how that works. I don't want to do it. I'm like, you could probably pick up way more property.
Dude, at that point, you say, I'm going to set a call with my boy,
Mm-hmm.
and we're all going to I'm going to
He
show
was
you.
using a friend of his that does 1031 that was also an attorney
Dude,
and a
I don't-
realtor, and I'm like,
Listen, so the cost of an exchange is almost free. It's
Mhm.
$1,200 all in to do everything.
mhm,
So my time is not worth that much.
right.
So I don't care if the person is using somebody else. I don't care if they might do a deal. They're never going to do a deal.
Mhm.
They might use my company services. I'll get on the phone anytime with anybody, anywhere,
Mhm.
and let's make sure they have the right information. Let's help you get a deal done.
Yeah.
And then that I found in life that just kind of comes back to me.
Sounds
So,
like the people that work with you like you.
well, hopefully.
Hopefully. Actually, all right, so we're going to end it off with story time. He got a call today while we're in the studio. You want to tell him about it?
Yeah.
Speaking about people liking him,
So
it's totally not his fault, by the way.
So currently there's an exchange that we're doing, and the exchanger wanted to walk away from the transaction with money in his pocket, and so he overfunded the loan without realizing that if you walk away from money from a closing, the IRS is going to classify that as equity. So we got a copy of the estimated settlement statement. Closing's happening in a couple days. We immediately noticed that and said, hey, like I said at the beginning, if people have good data, they can make the right decisions.
Mhm.
If they don't, the decision could be good or bad. We don't know,
Mhm.
right? So I immediately called him and said, hey, I just want you to know if this is your money, if you want it, that's no problem. However, it's going to be classified as equity and you're going to be taxed. And he was very frustrated about that.
It's his fault though.
He
thought he was being slick.
I don't know that it's his fault.
Whose idea was to do cash back at the transactions? We need to find out. I don't remember a seller saying, "Hey, have $100,000 in cash back for my property that you're going to buy for me."
It happens, right? And
sellers give out free equity to their properties
if you overfund the loan.
Oh, well, yeah, we had a deal like that. They overpaid by 20, 30K and then asked for money back. And it paid for their whole down payment and closing costs. It was actually pretty smart.
But that's going to be taxable in a 1031 exchange. So, the moment that we had the information, that's what he was trying to do. He didn't have the right info, right? Like that actually works really well unless it's taxable, right? So in that situation, if he could have his lender hold back some of the money literally and pay it in 1 day, 2 days, that very clearly delineates where the money's coming from. If he takes money back at closing, the IRS, being the greedy group of
the gangsters that
they are, they're going to say, hey, you get money, I get money.
F you pay me. Like, is that casino?
F you pay me.
Is that casino? F you pay me.
Yeah, Goodfellas. I mean, all of them, right?
Goodfellas, yeah.
Yeah.
Man, well, okay, so interesting topics. 1031 exchange. You can defer your taxes until your death and then pass them on to your kids, in which that becomes their bottom ceiling.
Yeah,
correct?
The basis, absolutely.
You can use your 1031 exchange to buy sub 2 properties as long as you use all the money. That was a big one for me.
Yeah, and you could always take some of the money and just pay taxes on what you take, right?
So you could take profit and then just know that you're only paying taxes on the profit. Exactly. Is it capital gains or is it earned income, or what's the type of taxes?
There's 4 taxes: long-term capital gains, state tax, depreciation recapture, and the net investment income tax, which pays for Obamacare.
All 50 states or just California?
That's true for all 50 states, although some states don't have
the state taxes.
State taxes, yeah.
Right. Guys, if you like today's episode, like, subscribe. Thank you all for watching. Go ahead and give Brandon a follow. Go get signed up with him on 1031 Exchange. We're going to be doing some business with each other. I'm excited, my man.
Sure.
Thank you guys for watching, tuning out.
Thank you so much.